Hello everyone. Let us start with our 11th webinar of this TradeClue series. Now today's topic is very much interesting and very simple to implement. It's called Consolidation Breakout. Now normally we see that markets undergo or stocks undergo consolidation for 1 day or 2 day or maybe for 1 week or 2 week, and they undergo a breakout either on the upside or on the downside. So let's understand, if we take a simple stock phase, let's say of yesterday. So if I see the stock yesterday and then I try to see how he has performed on yesterday's market, considering that the stock has undergone kind of sideways activity. So let's say yesterday's move in the market for a particular stock or index has been more or less on sideways range, going up down towards day's high and then day's low, and then finally closes over here. So assuming that this becomes our day's high and the low that it makes will basically become our day's low. So this is your day high, and we also have our day's low. And if you see the range, which is called as the difference between day high and day low, is basically the range. So the range of the stock or index has been very narrow. And whenever the range is very narrow, then you have two kind of outcome. One, either the stock can go down, on the downside move can basically happen, or we can say the stock can clearly go on the upside. Now, how to define whether the stock will go up or down, because both choices are there for the stock the next day. But our idea would be the direction, if it wants to go down or if it wants to go up, will be decided in the first 5-minute candle. So what I need to see, if a stock is undergoing a small narrow range, just see the high and low, and the stock closes somewhere in the middle, or maybe towards the low, maybe towards the high, and it's almost sideways the entire day. We try to see those stocks and we see the first 5-minute bar. And when I see the first 5-minute bar, assuming that I get this format of bar complete on the downside, and this bar basically will help us to know whether the direction is on the upside or downside. And this bar, let's say, is a complete red bar, that clearly shows the direction is now going to be on the downside. Now, what is the importance of this red bar? There are many things which are basically getting involved in this red bar. So let's bring them one by one to basically understand what this red bar has done. So this is the first 5-minute red bar, and this over here is your yesterday's close. And if I try to see the red bar, which has opened near today's high, and you can say open is equal to high. So the first point is open is equal to high. And that shows that moment it has opened, the selling has come. So a complete red bar, open equal to high, right from the word go, the selling has come. Now, as the selling approaches downwards till the 5 minutes are over, it takes out yesterday's close. So it's going below yesterday's close. It's also now taking out yesterday's day low. So that is also being breached. Once you breach day's high, is already not able to go above day's high, and even if it opens above day's high, it is taking out day's high, yesterday close, day low, and a complete red candle open equal to high. That will set the tone for tomorrow. So moment we see a red candle 5-minute taking out a consolidation phase for entire 6 hours of yesterday in a very narrow range, the opening candle can give you a very good trade called as a momentum trade right in the morning. So once you get this, apart from this, if you even get something like a dynamic line, which we have already discussed in the last webinar. So dynamic line, if I get along with the red bar, then this would become a super resistance zone. So not only now when the price starts coming on the upswing, after this red, if price starts coming even up over here, it will constantly be on the resistance part, where the day low will act like resistance, because all the people who have bought at day's low, they will be sellers over here. Plus you have a dynamic line that will also become a resistance, and the word go right in the morning, you are seeing that selling is coming through. So very simple technique, and which can also be implemented by you and can be traded in the first 5-minute candle itself. So the most important part in this case is complete consolidation of last day in a narrow range. So day high and day low are very much aligned, not very much broad. They are much narrow. And then the opening candle, the 5-minute candle, which gets us enough time to understand how this will pan out. A complete red, and it takes out yesterday's close, day's low, day's high. Everything is being removed by one candle with open equal to high. Now, when it starts even coming up, approaching up, the day's low will act like resistance. And plus, if you have a dynamic line, then it adds more conviction to take this trade. Now, it becomes very simple. This at the top or open becomes your stop loss. So let's see some of the examples, how we can bring this into practice. And I'm taking yesterday's day to basically understand how we can look into this. Now, if I see a day prior, so before the day starts, let's see a day prior. So if I see the high of Nifty was somewhere over here and the low of Nifty was somewhere over here. So if you see, the range was big, it was not completely narrow. So if you see here, the price went up, came back down, and then if it would have remained till here, then the range would have been narrow. So it's very clear if I just go out and connect the day's high to day's low. Correct. So we can clearly see this is your day high to day low. So in this case, it's from the high to the low, which is over here, where the range is very big. Okay, and the price has undergone a good amount of correction towards the end also. Now, even after undergoing correction, let's see how it performs. So you have a complete red candle. Now this candle is the 5-minute candle, because we are on the 5-minute chart, a complete red candle. And this is your daily resistance for the day. So it's below that. So one thing is good. The red candle is open equal to high. Then it goes down below yesterday's close. We can also say it is below day's low, and it's been breached. Straight entering into the support zone called as DS, daily support and weekly support. Now when it comes over here, we are very clear, two support zones, some bounce activity will take place. Now see how the bounce will take place. This is your day lows line. So let us draw a day low line. And in case of day low line, we are very clear that in this day's low, once the price comes back up, it will face resistance in this zone. Yesterday close is also over here. So let's see how it pans out. So you have a strong uptick coming through from the support range, and then trying to go past that, you have a red candle coming through and then go sideways, and finally he's trying to now breach the downside. So idea over here is you have a good support zone. That is why the bounce came, and that is why we need to wait and see how it pans out. When it goes up, you can clearly see it's trying to get resistance from day's low, from yesterday's close, and the strong red candle pushes the price down smoothly. But this all said and done, one thing is very important. Yesterday's range was very big. Now let's take few cases. So let's say if I'm taking all the 4 IT stocks, if I take Tech Mahindra, so I'm not trying to apply any conditions to Tech Mahindra. All I need to do is see, before I see today's days and performance, what was yesterday's range. Again over here, days high for Tech Mahindra for 14th May is up. Days low is here. So the range is too big. So I don't want to apply that. Let's go for HCL Tech. Again, HCL Tech, we can see good red candle which has come. Now this would be interesting, because if you see over here, the day's high is somewhere over here, right? So day's high is somewhere over here. And if I go down to day's low, that is also the close. So that is also interesting, where the price has closed, that is itself the day's low, closing at day's low price. And this is the high price. So still the range is very high. It was almost in the higher range towards day's high, and suddenly towards the end some kind of selling took place. Now when it opens, it doesn't take out yesterday's high because it is already below DR, so that's good for us. Taking out yesterday's close, then it also takes out DS, that's your daily support. So one good red candle taking out the day's low, yesterday's close, and open equal to high below DR, complete red candle. Once it completes, it's below DS, and if you see, it tries to come back up, one attempt, second attempt, and it's not able to go up, goes straight away down. So these are good trades that you can take, but still the range was, I would say, a little bit on a broader side, not a very narrow range. So HCL was also decent compared to TechM. Let's take Infosys. When I see Infosys over here, it started out with a complete green candle. A prior day came towards the high, some selling came through, and all the way it settled over here. Now this will be very much interesting because this is your day's low, this is your day's high. Once you have this day low and day high, and then you know a strong buying has come from this point, from the open, the price came back, and again there was a bounce from the same point. So if this gets breached, then only downside can come. Plus the range is little bit on a higher side, but still it is little narrow compared to TechM and compared to HCL. Now as it opens below DR, doesn't go beyond DR, open equal to high, selling comes through. If you see the close of this candle is not below day's low. All this in TechM, in HCL, in Infosys, it was not below day's low. And then you see a small bounce happening, and that was very clear. Even if now bounce takes place, there will be selling because of the red candle coming through, and the selling comes through. And now it sustains clearly below the most important part, day's low of yesterday, right? So this was not a very clear red candle. The red candle should have gone up till here, taking out day's low, which was not the case. But if I take the same structure on 15-minute chart, you might get a very good red candle. So let's see, is it that? No. On 15-minute also, if you see, the candle has come back up, right? So that's where little bit of, you can say, retracement has taken place, and this should not get classified into our setup. We want a red candle breaching and closing below day's low. Okay, so that is not happened in 15-minute also, and neither in 5-minute either. Now let's take TCS, and in TCS it would be very, very interesting because here is your day's high, right? So we have now days high over here, and we have days low over here. So the range, if you see, it's very, very narrow for TCS. That's like hardly 1% range from 1920 to around 1900 or so. That's like 1% for TCS is nothing that big. And all the way, if you see the last 3 hours, is also towards days low. So that means the upper part, large amount of selling was coming through. So that was also very clear that on the higher side after this, the selling was very, very bright, and the price sustained on the towards the day's low. Now let's see the opening of TCS, and that will be very, very interesting. When the TCS opens, it opens at DR, around the resistance zone seen yesterday, and open equal to high, complete 5-minute of fall. This complete 5-minute candle, it closes below DS. So that's also interesting. Starts at DR, closes below DS. Then if we see, it has taken out almost days high, that's your DR has been taken out, days high resistance zone is there, yesterday closes there, and days low, that is being removed. Once it is removed, then you can clearly see after this, if the price comes back up, suddenly selling is always there, and the price falls straight away on the downside. So very clear technique of consolidation. You can clearly see which stocks to focus in consolidation where the range is narrow and slow, and then all we want to see is the 5-minute red candle or 5-minute green candle going for upside, right? So that's a clear strategy where you can also put in days low and DS into picture. When they both are breached with the same candle, obviously the conviction is more high. So more lines it breaches. So we not only are relying on yesterday's day low, but now we can say we want one more important pointer over here. If there is day DS, which is your daily support. So if DS, your daily support, is also being breached, then you have a fantastic downside open, right? So this becomes a very simple strategy to apply, but more importantly, to apply on those stocks which have undergone consolidation. So a narrow range of day high and day low, yesterday close somewhere in the middle or somewhere at the low, somewhere at the top, and then following candle 5 minute takes out everything, importantly day low, DS, and then whenever the price comes back, if you get a dynamic line also for sell, you can just go all in, because this trade will be fast in your direction, and you can be more convinced once you keep taking these trades, and the trade value can be improved drastically, right? Because the trade does not live for long time. So if you see over here, almost from 9:20, your trade is, you are into the trade almost for next 3 to 5 candles. So once it starts going in your favor, you don't have to worry. So ideally 2 3 candles you get enough to enter, and once you enter, then things starts going in your direction. In next 3 candles you are out. So more or less by 9:45 your day is over. So once you get grip of this setup, it works fantastic, gives you time to enter, and it gives you good risk reward. Obviously, the day high will become your stop loss. So you need to do your risk management, how much to trade and when to trade, all through using the important red bar plus the important levels which are given. Now we have a query in the live market. If I go into query section, there is something called as green red bar. So when I click on this green red bar in the live market at 9:15, you will start getting which stocks are showing this complete red bar. The stocks which go show complete red bar can clearly be seen and then can be acted upon. But you cannot go through 20 30 stocks. So you can first take the stocks, those which are going in a narrow range, select those stocks and add it to your watch list. So let's say if I was focusing on IT stocks, Tech M, HCL, Infosys, TCS, apply it, put it in my watch list. Then you can apply the live query green red bar, and whenever the alert comes over here, rather than saying on Nifty 50, we can say just apply on my watch list. So those stocks in your watch list which you have decided a complete narrow range stocks, you can just wait and see the stock giving you a complete red bar, go in and then take action upon. So that's very very important. If you see like this over here, red 1, red 5, for TCS, it has given alert at 9:15 itself. Red 1 means in 1 minute there was a red candle. So 1 minute also there was red candle, and then 5 minute also there was red candle. So let's just see 1 minute what exactly happened in the start at 9:15. So this is over here where you see your the first 1 minute bar, which is also kind of red. Correct. So if you had TCS, HCL, all of those on your radar, you can clearly see, yes, 1 minute it was red, then suddenly 5 minute also red. Then you can focus on these two stocks which were coming out from your watch list. So you can apply to your watch list and you can have less number of stocks in your watch list. I've added a lot, but you can just add 4 stocks in your watch list and then apply the general query called as red green bar, and then you can go out and act very very swiftly, nicely, knowing all the levels over here, taking the action, and then keeping your stop loss. Fine. So thank you very much for uh, visiting for this webinar. Idea over here is a clear consolidation breakout. I'll keep bringing new webinars going ahead. Till then, stay safe, stay healthy. Thank you very much.